It's Thursday, June 24th. This is Street Live. I'm Katherine Ross, and I'm, of course, joined by the one and only Jim Cramer. Jim, what are you watching in the markets today?
Today's just a jailbreak. Every single group is doing well, and a lot of that has to do with the fact that we are in a seasonably strong period. There's not a lot of new news, and as one of my best guys told me, Jim, it's good. It's good. And this is a person who runs billions of dollars, and I kind of feel like I only mentioned that it's someone else because it's good. And I don't want to take credit for something that is pretty simplistic, but in the end, beautiful. And that is that there is a breakout of every stock, with the exception of some oils, and it's rather amazing.
I agree. And I think that I want to capitalize on the lack of headlines here, Jim, to kind of ask you more of an evergreen question that I think every investor kind of wonders about. And that's when you get a big data dump, how do you, as an investor, sort through the noise to find what could actually move the markets and trick algorithms?
Well, on a day like today, you try to look at the ratio of positive and negative research, and it's about 10 to 1. So few downgrades. And the one, by the way, is I don't even trust, which is the negativity toward KB Homes. I think KB Homes having the best second quarter in 13 years is significant. And the fact that they were supply constrained is significant as opposed to, and they did raise the lower end, they didn't raise the higher end of the revenues, which was disappointing, I guess, to some. But if that's the sum total of disappointment, then you know that things can go much higher. I am stunned that a stock like NVIDIA, which where people gave it a $900 price target, it just keeps going further and further and further toward that. I want people to understand that it's not Ethereum. People seem to think it's Ethereum. Ethereum is this throwaway unit of when they have cards that don't work for gaming. Instead of scrapping them, they give them to Ethereum. So let's make sure people understand this is not an Ethereum play. This is a high-performance artificial intelligence machine learning play, and it's working.
Let's circle back to KB Home, because also in Mad Money, in your opener last night, you talked about Toll Brothers Lennar. I mean, do you think that KB Homes, you think that there's too much negativity around that, and I hear you there, but I'm wondering if you think that these kind of signal maybe a top for the housing market here, or the housing bubble, as someone would say it is?
Well, no, I mean, I'm saying that it's a possibility that there's been multiple years. One of the things that I've been saying since these stocks bottomed is that we were building 2 million homes when we had half as many people in this country. And that's crazy. The millennials are now 30 average, and they're still in their parents' homes. Well, now they're moving out. There's great affordability because interest rates are low. There's multiple years. We don't even know whether there's like 5, 6, 7 years where we're going to try to catch up with the demand. A lot of the reason why we don't know is because of COVID. If you take a look at the market like Boise, which both KB Homes and Toll Brothers singled out, that's a market that is from expats of California. Meanwhile, the California market, we're back to having the Inland Empire. That was the hottest area back in 2007, 2000. I went out there to see if I could actually buy land. That's back. The difference is that the buyers have great balance sheets. They are not using a crazy loan to value, and they're not using the what was basically they were getting a loan against their house and then using that loan to buy the house, and that's done too. So this is a very solid core of people who are buying it, and I think that this is a remarkable moment. And to sell KB Homes here is to not recognize the longevity of what could be a secular trend, not a cyclical trend. I've always felt that home building was incredibly cyclical. I can't say that now. The numbers are just too good.
Yeah, and Jim, just to talk a little bit more about the housing market, because we really haven't had a chance to on this show, what's interesting also to me is all of this discussion about whether or not the investors coming in to buy houses are pushing millennials who are living in their parents' houses or looking to buy their first home out of the market when it comes to affordability.
Well, I mean, I think that in the old days, it was the American dream, and then it left because housing actually depreciated for the first time since the 30s. And people became much more interested in the stock market, particularly in index funds, and much less interested in buying a house. But COVID has created opportunities to be able to leave the city. Millennials have, because of stimulus, and not spending. They have more money. They can put a down payment, a large down payment. Interest rates are right. What I'm hoping, and what I said last night on my show on Mad Money, is that Jay Powell realizes that to break up this virtuous circle of people who have cash, good balance sheet, and buy home would be a shame. And housing punches above its weight, even though housing is only 10% of the economy. Obviously, when you think about what goes into a house, whether it be the raw materials or whether it be retailers when you're doing your house, or whether it be just all the paperwork and the white-collar people in the banks, then it's really a terrific multiplier, and we should not kill it off if we're trying to get the economy back to where it was in 2019.
So let's talk about a company that we frequently use to buy stuff to put in physically in our houses, and that's Bed Bath & Beyond, because I noticed you were tweeting about it this morning, and you think that this stock, in your words, could go to the moon. Is this a stock that you think could succeed with the Reddit bulls if they were really to put their weight behind it?
Well, it's one of the reasons why it was upgraded is that the analysts were saying that the Reddit people have finally left it. It does still have a 33% short position. It was hard to move because the shorts came out again, and there's a lot of people who bought it in the 13 to 17 area, and they want to take the profit. I do think that the strategies that Mark Tritton put in, former merchandising officer, chief merchandising officer for Target, now the CEO of Bed Bath, are working. And because they're working, because Bye Bye Baby is not even giving any credit for Bye Bye Baby, I like this stock. Now, I do think, I was hoping to come back to 2022. It's just not going to do that because Tritton's doing too good a job. It was a poorly run company. It's no longer poorly run.
Circling back to a stock we discussed yesterday, and that's Southwest, because you sat down with CEO Gary Kelly this morning to talk about his succession plan and even business travel. I mean, Jim, were you reassured by Kelly when it comes to his succession plan?
Oh, absolutely. But most important thing is that Kelly basically said numbers are too low and that they aspire to be the most important carrier both in North and South America. And when he said he needed more planes, and by that planes are available, and he's buying the 737. I mean, when he said that, I think that Boeing, remember I said that Boeing may do an equity offering this quarter, or Boeing also had sloppy execution. It did hurt it. But, to me, the takeaway was be ready to buy Boeing. We have own a fractional alerts because he said he needed more planes. Gary Kelly seems to be committed to becoming a much larger airline, and I think he can do it. Again, he's stepping up to executive chairman, not going anywhere in 2026. But holy cow, he basically gave you reason to buy Southwest and buy Boeing, but the market seems to be confused by that or has not watched or did not watch the interview.
Well, especially because, Jim, you specifically asked whether or not he still believes in Boeing, despite the back and forth that we've kind of seen with him and the company. And I thought that he did a good job of not stepping around your question and maybe not being as direct, but answering it.
I totally agree with you, Catherine. I was surprised that he did not so-called take the bait of the execution issues. And the reason I say that is because he said it on air that he wasn't happy. And so I felt that he would either clarify that or say, well, things are better. And he left that one hanging. But maybe the proof is in the pudding. He's buying a lot more planes and wants more planes. Now, the interesting thing about it is that there are many planes available. So he may want more planes. Let's see the orders because Boeing's got a lot of planes to sell. And so maybe this is the beginning of a second wave of buying, and it's very positive for Boeing. Again, there are a lot of people who say you got to wait to see if Boeing does an equity offering. The old CFO who retires in 5 days was committed to not doing an equity offering. The new CFO has made no such commitment.
All right, and I want to turn our attention to a segment you did on Mad Money last night, Jim, because you said that investors who are looking for a fast-growing gaming stock should look at AppLovin, and your praise even went so far as to say that you think that this, and this is a direct quote, greatest little stock you've never heard of.
Well, I mean, look, people want to buy some of these other stuff. They want to buy Unity. They want to buy Roblox. I mean, I think those are comps. I mean, this seemed like a company that I was at Bar San Miguel last night. And I was saying we ought to look into this as a way to be able to jumpstart our Google presence. I mean, a lot of people don't really know how to do a good app. They're doing good apps, and they can tell you how to do a good app. Well, count me in. The apps, Google app is how you get business. I also think, by the way, that Nextdoor could be a good way. I'm going to try that next month. But I thought the company seemed very interesting, if only just because even the caller came with it, suggested it, that people have to understand that this particular part of the economy, which is using Google to help small, medium-sized business, is a bit of a black box, and these guys can really help. I thought it was a very interesting story.
And finally, Jim, I want to end by mentioning your real money column because it focused on the rotation that was triggered by the consumer price index back in May. And your final note was that the markets are a humbling animal. So, Jim, you are human, but you're probably one of the greatest investors that we hear on TV. So how can investors keep their ears close enough to the ground to sense out rotations?
Okay, I think that you have to be willing more to meld dramatic headlines with stocks and relate them, and don't be so quick to get caught up in the current discussion, value versus growth, or cybersecurity versus not secure companies. Those were all the things that were in play, and what really mattered was that the big investors, the institutions, felt that that CPI number was so hot that they couldn't wait for the Fed to move. They had to say the Fed is going to move, and therefore you had to get out of the cyclicals and you had to go into the companies that have a high price to sales ratio. Price to sales is usually a dicey way. It's DocuSign, it's Snowflake, that's Zoom. There's Kathy Wood stocks, ARK, and that was the chance to buy ARK. It's interesting. Many people, including me, felt that the idea. She said, "Listen, this is where there's going to be the right time to buy high growth," and it turned out to be right because the economy, the perception was high CPI. Fed will raise, got to buy stocks that do well when the Fed raises. And that's what's been playing out. Now people are starting to recognize that, and I'm wondering if it isn't too late. Fed not going to raise, inflation going down, maybe the cyclicals like a Union Pacific are right, and that's what we think in Action Alerts.
Speaking of Action Alerts, you're going to be heading there with Jeff Marks, Senior Portfolio Analyst, right after this. You can watch them over on actionalertsplus.com. I'm Katherine Ross, and we'll see you tomorrow.